Hey, this is Neil Bawa, the mad scientist of multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
All right, so welcome to the Mailbox Money Show. Today we're talking with my friend Brian Davis about how to and why to be a part of an investment club. Now, an investment club is different than a syndication, right? A syndication is you join at 50 or 100,000. We've raised over $40 million for different deals. This is basically people come in sometimes as little as $5,000. It's not a crowdfunding, but it has some similarities, except there's a lot of connection with other members in the group, and people can choose to invest or not to invest. It's a very unique model. I don't really know anybody else has anything set up quite like him. And I think you're going to like it, whether you're high net worth and you're like, hey, I just want to grow my wealth and I've got this much to invest, or you're brand new. I think you're going to find some great takeaways here. So let's jump in. All right, welcome to the Mailbox Money Show. I'm your host, Bronson Hill. I am super excited today because we've got Brian Davis in the house and super excited to talk with him. He actually has a very unique investing approach, and the way he's done it really is through an investment club. And an investment club basically involves, I'm going to have you get into the definition here, Brian, in a minute, but it involves different people coming together, sometimes with a small amount of money, and everybody chooses to invest or votes to invest, and then they get into a variety of assets. So there's a lot of learning that can happen in something like that. And so we're going to get into kind of, why people start investment clubs, why people join investment clubs, what are the pros and cons, and kind of how that compares with just doing syndication on your own and kind of who it's good for. So, Brian, really good to see you, brother. I know you're coming all the way from Peru, which is awesome. So, love that you're living the local or remote life and living your best life, brother.
Oh, Bronson, thank you so much for having me. I'm pumped to be here.
Awesome, man. Well, that's great. Well, tell us a little bit about, well, first of all, why don't we get into a little bit of your story, kind of how you got started in real estate? I know you're super passionate. You've got Spark Rental, which you guys are doing a lot of different educational things. You're putting out articles and resources and tools. And I encourage everybody to go to your website to check you out. But talk a little bit about how you got started and what kind of sparked things for you as you get started in real estate.
No pun intended, right? Uh,
Exactly.
yeah, so I fell into real estate totally by accident. I graduated college back in 2003, had no idea what I wanted to do with my life, like so many young people. I fell into a job working with a hard money lender who happened to be buddies with my stepdad, right? I mean,
Right.
it's a story that I mean the details differ, but a lot of us have that kind of story where we fell into a career by accident. But
Mm.
I discovered that I really liked real estate. You know, granted, this so the early to mid aughts, everybody's making money in real estate, hand over
Hmm.
fist, right?
Yeah.
So I'm watching everybody make all this money. I figure I can do this too. Like I'm smarter than these guys, So I went out and bought a whole bunch of properties, then lost my shirt in 2008. Went and went on a totally different career path. Got a job with an e-commerce company, but it was a company that serviced mom and pop landlords, and I never would have gotten that job if I hadn't been a landlord and mom and pop real estate investor myself. So that's how all that stuff goes, right? Door closes, window opens. And in 2015, my wife and I moved abroad. We moved
Mm.
to Abu Dhabi,
Wow.
and and it was around that time I left the job I was working with that e-commerce company and a former colleague of mine, and I launched Spark Rental. And I moved abroad with a bunch of those rental properties that I had bought when I was in my 20s. And quickly, I learned the hard way
Mm.
just how much I had been subsidizing those properties' returns with my
Mm.
own labor, with my own
Hmm.
efforts. So even though I had a property management company, I had still been spending a lot of my nights and weekends, coordinating with contractors and visiting the properties and dealing with difficult tenants. And I moved overseas and I couldn't do any of that anymore. And saw just how badly the properties were performing without me subsidizing them with my own personal
Right.
labor and time. So I ended up getting rid of those properties.
Yeah.
is the short version of that.
Let's
Um,
stop one sec. That's something I realize as well. I think a lot of people that are wealthy or just even real estate investors don't realize their time is valuable. And you can say, "Oh, I'm getting this great return" or whatever, but then if you take yourself out of the equation, like, well, what would you have paid yourself? Like, what would your time have been worth? Especially for high earners, it doesn't make a lot of sense. And so I love that you brought that up because a lot of times we think, man, I can just do all this and do single family myself, but it's if it's not scalable, you're not really actually getting where you want to go.
well, right. And especially if you're comparing rental properties to truly passive investments like
Yeah.
index funds, for example, right? Or
Right.
real estate syndications or bonds or whatever it is that's an actual passive investment. if you're comparing rental properties, which do require some work on your part, both to buy and then to manage, even if you have a property manager, you still have to manage the manager and you still have some accounting and bookkeeping and just headaches that you have to deal with, then it's apples and oranges. And you do to make it apples to apples, you have to calculate how much time you're putting towards those properties and then the cost, the dollar value cost of your time. And you probably won't like what you find is especially for higher earners.
It's true.
So yeah, that's a lesson that I've returned to again and again over the years in our blog and in our podcast, talking about that. Rental properties are not truly passive investments. They're semi-passive, depending on how hands-on you are with them. Some ways of buying properties is more passive than others. Turnkey properties are obviously less work than going out and doing BRRRR deals, right?
Right.
But it's not passive, and you have to account for that labor. So anyway, went down a little bit of a rabbit hole there. Sure. Where were we?
Yeah. So you were sharing your story. You're in Abu Dhabi. You realized that these things you were doing, you actually didn't count your labor in that, and so you made some shifts.
Yeah. So I sold off all my properties. Spark Rental, our original vision for it was as a one-stop shop property management software platform for mom and pop landlords, because at the time there wasn't really a good one. There are a couple of decent ones now, and we did eventually create that software platform, and we do like it. But it took us a long time to get there. I mean, we hired a web development company that ran off with half of our seed capital, and we had all kinds of twists and turns. So in the meantime, we focused more on education. We built out a blog and we started doing video podcasts and YouTube and all that kind of stuff. I started selling online courses and doing a lot of free courses and classes and webinars and all that kind of stuff. And at a certain point, I sell off my rental properties and I realize I'm teaching something that I'm no longer doing, which is inherently a problem, right? I mean, you're out of alignment or out of integrity or however you want to put it when you're teaching something that you're no longer doing. So it was around that time, being overseas, when I discovered passive real estate investing. And I started by dabbling with crowdfunding platforms, because some of those, that's a passive way to invest, right? It happens to be a more publicly available one than private equity real estate syndications or private equity real estate funds. So I dabbled in that. I started investing passively in syndications, and I realized that I loved it. And it was one of those like love at first sight things where I was like, I wish I had been doing this back.
I know.
Yeah, right?
Where was this 10 years ago?
Yeah, exactly. So it was around this time that our course takers, our students, had kept asking us like, hey, I'm not quite ready to buy a rental property by myself. Can I just invest with you guys in one of the deals you're doing? And we kept saying, no, we're not doing that. And then we looked at each other one day, my partner and I, and we're like, maybe the universe is trying to tell us something, or maybe the market is trying to tell us something here. Like, what would it take to say yes? So we experimented with a couple single family rental property deals that we allowed our students to go in on with us. And it was just way too much work. It was kind of fun, and it was, we were earning good returns, but it was too much work. And then so but around this time I had started investing in syndications, and I was like, hey, these are not a lot of work. Like, we could potentially do this. So we did a pilot deal, a real estate syndication deal with our students. We opened it up to them, and it was really successful. It was popular. So then we were like, well, what's to stop us from doing this all the time and opening it up to the general public instead of just our course students? So we did. And so that's how our co-investing club was born, just kind of by trial and error, and selfishly by me wanting to invest smaller amounts in these syndications than the typical 50 grand, 100 grand, 250 grand that real estate syndications require.
Right.
So, and that's as that's how a lot of businesses start, is, the founder has a problem, and their solution that they find ends up being the solution that they sell to their customers. So
well, it's usually the way you've kind of gone with it. I haven't seen many people. I don't know if you're thinking, maybe there's one other one, but that have started a true investment club. A lot of people will start a fund and say, okay, it's the minimum is 50K or whatever, but you've allowed for some folks, especially if they're non-accredited, to come in at $5,000 or, you know, 10,000 or like a smaller amount of money. Like, how does that work? Does everybody put in the same amount, or is it more, or do people vote on going into a deal? Like, how is that structured from like an actual investing standpoint? Is it like, okay, well, we see this deal, we're interested, and then everybody kind of votes on it, everybody puts the same amount, or they put differing amounts in different deals, or is it like, how's the ownership kind of work in that?
Yeah, no, all great questions. So here's how we approach it. And by the way, before we even get into that, you mentioned non-accredited investors. That is a huge core value of ours, is inclusivity with non-accredited investors, because those are the people who historically have really struggled to invest in syndications at all. So
Right.
every deal that we look at as a club allows non-accredited investors. It's a non-negotiable for us. So what we do, we aim to review a new deal every single month as a club. So we do the networking with sponsors. We as we get deals in our inbox from them, you know, we look them over, we talk about them internally, and we look for ones that we think might be a good fit for our club. And when we spot one, we'll reach out to the sponsor and we'll ask them to come do a Q&A about their latest deal for our club. So we hop on a Zoom call or a Google meeting and have a live video call about this deal. Beforehand, we send out the investment summary deck, and if there's a recorded webinar about the deal, we send that out to our members. So everyone shows up kind of informed about the basics of the deal. And, you know, and then we grill the sponsor together. So, you know, we all sling our questions at the sponsor, and whoever wants to invest in that deal can do so with $5,000 or more. We form a single purpose entity, an LLC, just to act as like a joint venture for that deal. We open a joint bank account for that specific deal, for that LLC. And together, collectively, you know, we're investing $150,000, $250,000, $350,000 in these deals. And so we pass the minimum investment, of course, by doing that. But each person only has to invest $5,000, you know, or more if they want, you know, 10, 15, 20, whatever they want. But it's a way for each person to invest small amounts and across a lot of different deals. So you get that diversification. And the sponsor only has to deal with one person. They're communicating with either me or my partner Denny. So other than them coming and appearing before our club to answer questions, they're just dealing with us. So they have a single LP that's investing, you know, in LLC, and they only have one person they have to communicate with, but they still get that full, you know, 250,000 or whatever investment from our club. But each of our members gets to invest small amounts. So that's how that works.
So I guess my question for you then is, so is there's some cost that goes into setting up an entity and doing K1s for each investor for each deal? Do you guys take a fee to do that as well, or how, like, is that just kind of I always think when somebody organizes something, there's a lot of work that goes into it. So for you and your team, so how do you guys get compensated in that? And also, you know, with the fees, I just know even for K1s to have 50 investors in a deal or something, that can be tens of thousands of dollars just to get the K1s out. So how do you kind of manage that part of it as well?
Yeah, great question. So there are two costs involved in our club. One is membership dues to be a member of the co-investing club. That's $59 a month or $497 a year. And that's for access to new deals, for ongoing deal flow. And we aim to meet twice a month, one to discuss a deal and once for a purely educational presentation.
Sure.
So the membership dues get you access to the deal flow, you know, to the meetings, et cetera. The other cost that's involved is an accounting and administrative costs per LLC. So that's just for the deals that you are participating in, right? So the membership dues everybody pays, and that's for access to new deals. When you invest in a deal, there is, like you said, there's costs involved for accounting and, you know, maintaining the bank accounts and divvying up everybody's distributions and capital returns and all that stuff. So that's $75 a year for that LLC that you're a member of, to cover those accounting costs, which are joint among all the members in that who are participating in that deal.
Yeah. Okay. Got it. And that covers, like, let me ask you, what is the cost, like, to K1 a bunch of investors? And do you have like a special deal with an accounting firm that kind of helps you with that? Or do you guys do that in house, or how are you able to manage that? That seems pretty reasonable to manage all that.
Yeah, so we partnered with an accounting firm basically, and negotiated a bulk, a volume discount with them to be able to handle each one of these LLCs for a relatively reasonable amount of money.
Yeah.
Because we're doing dozens of them at this point a year. So
Yeah.
that's how we're approaching that and keeping it reasonable per person per deal.
Yeah, no, that makes sense. That's great. What are some things that you found when somebody joins your group? I know some people listening may want to join your group or be interested in Spark Rental. What are some things you found from people that are just joining to people that have been in the group for a year? Like when they take away, like, oh, I feel like I understand how to vet deals now, or I understand kind of how the process works, or I've gotten started and I've got some kind of peer support in this as well.
Yeah, so people come initially for the deal flow, and they often stay for the community element. I mean, the deal flow is
Yeah,
obviously important too, but
sure.
people, when they first join the club, they underestimate the value of the community.
Sure.
And I'll give you some examples. So when we vet deals, every time we hop on a Q&A with a sponsor, our club members are asking really sharp questions that never would have occurred to me. And I've been in real estate for over 20 years,
Yeah.
So, that's the power of having all of these different sets of eyes, coming from all these different industries, all these different perspectives, all these different political backgrounds, all that. All of these people are looking at the same deal, but they're coming at it from every different angle. So we each get the benefit of that hive mind, if you will, that
Hmm.
mastermind,
Hmm.
where people are going to ask questions that would not have occurred to you to ask, but you get the benefit of them asking that question, and or commentary too. I mean, I'll give you a quick example. There was a deal that we invested in Dallas. It was a multifamily property that was really designated for young professionals, was the target market for this property. And we had a woman in our club who, raised her hand after the sponsor left the meeting and said, "Hey, I live 5 minutes down the road from this property, and I drive past it every day on my commute, and I can tell you firsthand that it's a good property. It's got good bones, and there is not enough uh, housing, rental housing for young professionals in this market. So,
Yeah.
it's a good investment." I would never have known that, right? I mean, I'm living in Lima, Peru. So,
Yeah.
yeah, and most of the other members in the club never would have known that. But because there are so many of us each looking at these investments together, we get the benefit of that each person's expertise
Yeah.
and experience with it.
Well, I think that's great because the two things I found that really impact people's lives the most, Brian, are you really when it comes to investing and just about anything is networking and education, right? So being in the room with people that are ahead of you, or at least you can learn from. There's that quote: "You're the average of the five people you spend the most time with." So if you get around people that are more experienced in any area, or maybe they're in better physical shape or financial shape or whatever, like you're going to draw from that. You're going to learn a lot from that. And then the other piece of that is with the education piece of just learning together, being able to, there's things, oh, I didn't even think about that. Or somebody, whether it's I have a church men's group we meet on Tuesday nights, and it's just like somebody shares something. I was like, oh, I never really got that from that before, from this verse or anything. Like, so it's just amazing how when you're in the room with amazing people and you're allowing yourself to be educated and being in a place of networking, it can really be powerful. Where do you guys I imagine there's probably a lot of different people that come from all different backgrounds, different areas of the country. You get some professionals or business owners. You get some people that are really high net worth, some people that are more modest net worth. What would you say like is kind of the ideal fit for someone in your group? Like if somebody's listening and they're like, "Oh, I'm not sure if I should join that." Like, what are some things, kind of some of the questions they're usually asking?
Yeah, so our ideal customer avatar, if you will, working professionals, often with families, they have demanding jobs. They love the idea of diversifying into real estate. They don't have the time to go out and become a landlord, right?
Yeah.
So they want the benefits of owning real estate. They want the cash flow, they want the appreciation, they want the tax benefits, but they don't want to go out and then start a side hustle of buying rental properties or becoming a landlord, which I totally get. That's where I am in my life as well. Um,
Sure.
so that's sort of, so they earn a solid income, but maybe they're not, laughing all the way to the bank yet,
Right.
right? Um, so, again, we have a lot of non-accredited investors. We also have a lot of accredited investors in our club. We really want to service both. So, we only look at deals that allow non-accredited investors. That being said, we are planning on launching a little subgroup within our club for our accredited members to be able to feature some deals for them that are accredited only, without diluting or taking away from our regular monthly deal flow that allow everybody. So yeah, people, upper middle class professionals, people earning a solid income, but maybe who, haven't struck it to they haven't joined the 2 comma club yet necessarily.
Yeah.
But they're on their way, and they're looking for these passive real estate investments that give them all those benefits of real estate without having to start a side hustle of becoming an investor.
One thing that's been frustrating to me just over the years is the fact that if somebody's not accredited, it limits what is available to them. And there's actually been talk. If you listen to Mauricio Raul or some other people in the industry, they say that the SEC has talked for the last couple of years about having a test or having some sort of, you take a test and now you're accredited. It's less on net worth or income, and it's more based on sophistication. What would your thoughts on something like that be if there were just more stuff available for non-accredited investors?
Oh, I mean, I would be very supportive of having it be knowledge-based and not net worth-based. I know plenty of non-accredited investors who are very savvy and experienced real estate investors, and I know plenty of accredited investors who are not savvy at all. So, it's to me, it's an antiquated notion that, oh, we have to protect the unwashed masses, who don't know any better, just because they don't have a net worth of $1 million. It's such a paternalistic government kind of notion that, yeah, I think it's outdated. So I would be very much in favor of having some sort of sophistication test and letting anybody invest in these deals. Without that, because like you said, for non-accredited investors, not only is it hard to find deals, it's hard to find sponsors in the first place because they can't advertise these deals. Yeah. So it's hard for sponsors and investors to connect. When sponsors aren't allowed to advertise those deals, if they allow non-accredited investors, then non-accredited investors can't find them, can't find the sponsor. Yeah. So how do they connect with each other in the first place? And that's part of what we're doing in our club. Is Denny and I are doing that networking for our members, going out and meeting all these sponsors on behalf of our members. They don't have to do that.
Yeah, that's awesome, man. Well, I love the value you're creating, man. You're really starting with education and helping people to figure out a way to kind of get where they want to go. And I think that's really what this business is about. I think that the biggest competition we all have is not, other clubs or other syndicators. It's just Wall Street, and just people don't know that these options are out there. So I love what you have created for people, and just want to really honor and mad props for that. So if people want to reach out to you and want to connect, what's the best way for people to reach out to you, Brian?
Sure. Well, start by swinging by our website, sparkrental.com. There's a ton of free tools on there for active investors too, by the way. I mean, that is how the website started, was for active investors. So a bunch of free tools like interactive maps and calculators and stuff. And email me personally, brian@sparkrental.com. Super easy to reach. We are very much a mom and pop business. It's not like there's a VA who's checking my emails for me or anything. And we have a couple big Facebook groups too for real estate investors. We've got one for active investors. It's about 48,000 members. Wow. Another for passive investors at about 8,000 members. Very active groups, very high engagement. So check those out as well. And yeah, don't be a stranger. Reach out.
Awesome, Brian. Well, thanks for being here, brother. Appreciate it, and look forward to chatting with you again soon.
Oh, Bronson, thank you so much for having me. This was fun.
All right, so great interview here. Again, I always love talking with different operators and people that do things in different ways. Now, Brian and his group there is Spark Rental. They're not operators, but they do help vet deals. And so there are a lot of groups out there. There's a group called Long Angle. There's the 506 Club. There's Left Field Investors. All of these groups help passive investors to educate, to network. One of the most transformative relationships you can have as a passive investor is connecting with other passive investors. And so we're working on creating things. If you're a passive investor and you're somebody who's high net worth and you're like, hey, I'm looking to get connected, reach out to us. We're trying to create some things around this that are going to be really unique, some unique events, maybe some online education, and just really putting high net worth investors in the same group, in the same room, physically, virtually. And because again, a passive investor, another passive investor is not trying to pitch you anything, right? There's nothing to sell, right? Like, we're sponsors. We want everybody to do our deals. We want everybody to invest with us because we love what we're doing. But, another passive investor just simply will share their experience. Hey, this is what I learned. I would invest with these guys. I wouldn't invest with these guys. I would do this again. I wouldn't do this again. So really valuable stuff. So hope you found that interview valuable. If you did, please share it with a friend. Please review it. Hit the thumbs up button. Give us a 5-star review. And we'll look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.